All right, y'all. Weekend is over. Back to work we go. We got some more money to make this week. Had a fantastic week last week. Got one more final week of the month this month. But I'll tell you right now, there's a big old range right now on the hourly time frame. Ranges like to rotate. Now, I know we're pretty bearish overall right now, but I'll tell you, these conditions, if we can hit this thing right tomorrow, could trigger a massive short squeeze off the low of this big hourly time frame range. We'll cover all the details in tonight's video, where to find the short squeeze, time the entry, where and how to take profit. We're going to cover the whole entire game plan in tonight's video. I want to make sure you have a roadmap to make some money tomorrow as well. So charts are looking pretty good tonight. Charts are ready. Enough for the intro. As always, thanks for tuning in and watching my videos. Let's now dive in and make some money on what should be a fantastic Tuesday morning in our trade room. S&P SPY ready to go tonight. Nasdaq triple Qs are ready. I've got 4 clues on these charts telling me where I think the money is made tomorrow. The first clue, it's right here on the hourly time frame. I like to use the hourly chart as an overall directional filter. And like I said earlier, it's pretty easy to see right now. We're pretty bearish right now on the higher time frame. But what do you see right now? We are sitting at a ton of prior low support on both the S&P and the Nasdaq. And wait a second, is that a range up there? It definitely is. It's one big range. Now remind me again, what do ranges do? Yeah, they love to trade the edges and they love to rotate, right? They love to rotate. So I know we're pretty bearish right now, but this is not a great spot to be a seller. And so I'd love to find some bear traps down here and get us a nice squeeze going higher. Now, this one thing, well, maybe 2 things standing in the way of these buyers. The buyers have a couple hurdles they have to clear before we can get that slingshot, that squeeze back off that low. We're going to cover those 2 hurdles here a bit later on in this video. In the meantime, though, let's grab a look at the schedule for tomorrow. Busy week here. A lot of the delayed data points are going to be released this week. So lots of stuff we don't normally see here. There really isn't going to be much to worry about tomorrow. I'll be listening into Michael Barr and Thomas Barkin. That's probably the most important thing tomorrow is what they say. Michael Barr, of course, is the vice chair. Everyone's wondering, will they cut rates again in early December? But, speaking of that, though, the focus right now is on Wednesday, Thursday. That's the big focus right now. Wednesday night, we have FOMC minutes at 2. We have the big NVIDIA earnings report on Wednesday afternoon. Everyone's wondering right now, is AI in a bubble? And that is definitely going to be, I think, our next big data point right now is end of the day on Wednesday into Wednesday's close. And then tomorrow night, we'll talk about this more, but we got the big employment number. That is September's non-farm payroll number on a Thursday morning. So it's going to be a wild one. Wednesday, Thursday, we get consumer sentiment on Friday. So nothing too big tomorrow. The focus right now really is end of day on Wednesday for the meeting minutes and NVIDIA on Wednesday evening right now. So we'll worry about that later on in the week. Let's get back to our charts though, because I mentioned earlier, I know we're bearish right now. We definitely are pretty bearish. But again, that range above us, it wants to rotate. We're sitting at major support there. Not a great place to be a seller. But I said earlier, though, there's a couple hurdles that we have here. These buyers have to clear before we can really get a massive short squeeze. Let's now drill down to our tick charts right now. Tick charts are based on volume, right? They're based on ticks. They're better for entry timing, right? So the bigger picture, minute charts are good for the overall direction, but timing entries, you got to get your hands on some tick charts. The 7,000 tick chart there, upper left-hand corner. And in case you're tuning in for the first time right now, that is the 21 EMA. It is the only indicator we need to make repeatable profits each week. I see 3 really big clues right now on this tick chart right now. One big clue is the strength of that move going lower. Notice the separation away from that moving average. Separation means strength. Now, why is it important? Well, because anytime we see a strong move down, all of that momentum going lower is going to want to retest the low. We call these retest trades and bounce off of that low. We saw a beautiful one this morning, late morning, the trade room. Strong run down, they retest that low, and they bounce off of that low. So strong move is a big clue. Another big clue are these ranges up above us. There's a range up there, right? There's a range right above it. Now, what do range breakouts do? Range breakouts, they love to break out pullback. So right now we got that 6720 area. There's a larger one up top up here, that 6738 area. So these areas, right, these are breakout pullback zones. They're major areas of resistance. And my favorite part about this chart right now is that major low at 55.50. You can see it better on the hourly time frame. It's right there. It's kind of hiding right in plain sight right now. Now, what does that look like? That's a pretty strong move down. So would you agree with me if I said the sellers are definitely trying to take out that 55 and then that range? Yeah, that seemed to be a very logical area now for that short squeeze. The hard part right now, though, is that we have that strong run down. And so we have to anticipate these bears are going to be shooting for that run. Then I can look for some bear traps and run that squeeze going higher here. So my dream scenario right now is I would love to use the underbelly of this range. I would love to get like a bull trap up here. I would love to run this thing higher, trap in some buyers. And the way I'll do this is this pattern. I'm gonna look for buyers to try twice. And my goal on this bull trap will be getting above a prior swing. Buyers once, buyers twice, above that high, strong red signal candle like I teach in the free video course. And then as we drop, if I'm lucky as we drop, I'll get an add-on on here. If I can see separation away from that moving average, a lower low in price, I would love to add to this position just above the high before we go back and take out that low. So this would be a bull trap pattern like I teach in the free video series, an add-on trade, which is basically the exact same pattern. If you look at them, one's a continuation, one is more of a reversal. And then again, where would the short squeeze trigger? The short squeeze now would be anyone who sells up here. When they take their profit down here, there's that 55 half level. You tell me, is this a good place to sell? We're at major support, not just on this chart, but also on the hourly time frame as well. Big range, yeah, it's not a great place to be a seller, and therefore it's a great spot for a bear trap. Now the bear trap on this, let me start last Friday. I can be pretty aggressive on a retest trade. So once they retest that low, and really, guys, it could be anywhere below that low. I really don't care how far it goes below that low, right? I want to get that low taken out and then trap those bears in once. I want to see twice. Now, why twice? Because I need stops, right? We're very bearish right now. I need stop losses to fuel this reversal, fuel this short squeeze, right? To light that fuse for that short squeeze. So it needs to be, as we say in our trade room, it needs to be two separate tries, right? Two real obvious tries there. One try, two try. Once I see bears commit, then I can squeeze those stops. And like we always say in our videos and our trade room, when you get yourself into a short squeeze and you start seeing separation off that moving average, your job right now is to take half off at the first target and add that half right back on the retest. Love to add to our position. So it's a breakout pullback. It's an add-on trade. It's a bear trap, and it's an add-on as we go where? As we make our way back up to take out that high, and we'll leave a runner because, again, the hourly time frame range wants to squeeze going higher. I love this sequence going lower here. But what if I'm wrong though? What if we keep running higher here for overnight? How do we adjust our trade game plan if that happens? I'm going to cover that in 2 seconds. But before we do that though, let's pit stop for a second because I know most folks watching right now, you guys know these patterns. You're making bank with these already. I get so many great emails every week. You guys making money off all these pattern setups. But listen, if you're here for the first time right now, this could be a brand new strategy for you. Don't you worry though, I teach all of these entry setups. In fact, I have a ton of examples of traps, add-ons, retest trades. I'd go into so much more detail of this stuff on my free video course. And guys, the markets are way too good right now not to be making profit. So what I'll do is I'll put a link up top there for you. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is remarkably simple. More importantly though, let's face it, right? We make our money by timing good entries. So in that free video class, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, get your P&L back in the green again. Guys, if you're still missing the best moves each day, if you've lost your confidence in your current strategy, what are you waiting for right now? Hit that link that popped up there. Watch that free trading course video series. Everyone loves all the trade examples I include on the website, all part of that short video class. The best part is it's completely free for you. Keep in mind too, guys, I'm going to put all the important links you need down below tonight's video. Start first on that free video class. Most folks start making money all on their own, all from that free video course. So start there first. Get your charts right, get your mind right, get your P&L back in the green again on that free video class. Then don't forget, we trade together every morning. We trade all these setups together every day, 8 o'clock Eastern time. I'll put that link down below. Come join us in the trade room. And if you're on Twitter, or X as they call it these days, I post a ton of videos and charts and mindset stuff on my X feed in between these YouTube videos. If you're on the X platform, give me a follow. Again, all the important links you'll need to learn this roadmap, time better entries, make a lot more money because of it. I'll put those links below tonight's video in the description of this YouTube video. All right, so now we know where to go if you're here for the first time right now. And now you know kind of as we go up, it's the bull trap, it's the bear trap, right? It's the squeeze up off of that low. Love, love, love that game plan for tomorrow. But what if I'm wrong though? Right? What if we keep running, going? That's a great question. So you'll notice I marked up this little tiny range right there. I didn't want to distract from the first core lesson here, but there's this little tiny range right there, a little tiny range like right in there, right? Okay, so if we start to rotate going higher here, if we just blow right, if we blow right through that breakout pullback zone, again, that should not surprise anybody, right? Because the range up overhead, strong run down, they've already retested. We know retest trades are very, very common to get a bounce here. So that range above us is begging to get squeezed on. And so it wouldn't surprise me at all here if we find our way running going higher. The challenge we're going to have though is if we do squeeze going higher after hours or in the pre-market tomorrow morning, I don't want to buy high, right? Remember, we're still a pretty bear market here overall. So what my goal will be on this is if we do end up running higher here, my ultimate goal is to use these little tiny ranges right there for what's basically a two-legged pullback. Now, two-legged pullbacks are always my goal whenever I see a nice big run going higher. I don't want to buy high. I want to buy nice and low. And so a two-legged pullback is just like it sounds, right? It's one leg, two leg. Most of the time what happens on these is we'll get just around that moving average, right? So one leg, two leg. Think about a measured move, right? Measured move, one leg, two leg, measured move. Now, I'm not going to blindly buy this area. And by the way, if we're lucky on this, we'll get one of those classic bull trap patterns like I showed you earlier, right? Above that high. I mean, that would be the dream scenario there. One leg, two leg. Again, underbelly of that range. It's a two-try bull trap like I teach in the free video series, right? Your sell signal there is closing below that moving average. Then once I get that pullback going lower now, and again, it could be off the previous range, could be this range. I'm not 100% certain which range they're going to use here. By the way, it may go all the way back to that low, right? And then we do the two-try bear trap, the retest trade off of that low. In this scenario, though, if they can reverse this pretty good, make a run up into that breakout pullback zone around 67.40, we're less likely now to go all the way back to retest a low. We're more likely now to wind up getting a breakout pullback off this range here. Now, breakout pullback, two-legged pullback, bears once, bears twice. Remember, all of that momentum now wants to go where? It wants to take out that high. So, one try, two try, bear trap, and we're trying to run that sucker back up, taking profit targets off at that high. And I will definitely leave a runner tomorrow. If I can get into something good going long here, I will definitely leave a runner tomorrow, because again, that big range above us, it's going to want to swing, right, and rotate back higher again. So we go up. We're selling that bull trap. We might not get that one. Oftentimes, these things will push and keep going there. So if we can get it, look for that short there. Half off, right? First target, stop moves down to point of entry, bear trap off the breakout pullback zone, and we're running, going higher here. There are quite a few examples of that trade right there inside our free trading course. So make sure you grab that link down below tonight's video description of the YouTube video. Unless you like losing money each week, then keep doing things the wrong way here. Let's keep going. How about some Nasdaq right now? Nasdaq is similar, but you'll notice right away it's a little bit different right now than the S&P here. Right away, you can easily see one big difference, right? Again, there's that strong run down from a couple of Fridays ago. They retest off that low. You can see why I like retest trades. Big bounces. But right away, you can see right away though, strong run down. This is what I would say is unfinished business, right? That's that 626 level, unfinished business right now for those sellers. So that's one difference there. The S&P, of course, had already retested its low, that range above us. Again, ranges, if you learned one thing from me, we know that ranges like to rotate. So we're now just completing what we call the pendulum swing, the amount above, down below. We're just below a little swing right there. So again, this is first of all, a very difficult spot to be a seller, and therefore a great spot for a bear trap and a rotation and a short squeeze going higher. When you think about it, the amount below, the amount above, that puts us right around that big range above us. And when you look at this chart, look at the chart this way. Big move down, big move up, big move down. This feels a lot like one big range, doesn't it? It really is basically one big range here. So again, difficult to be a bear down here. We're pretty bearish right now because of concerns about the valuations of the AI companies right now. But again, pretty difficult to want to sell where we are right now. Now, let's kick this up a couple more notches here. Let's go over now to our tick charts. And by the way, guys, if you're enjoying tonight's video tonight, please help me grow this channel, will you? By hitting that like button. Make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my videos. So as always, thank you guys so much. All the likes, all the subs, all the shares, all the love I get down the comment section below, except you haters down the comment section, right? No love for you guys. All kidding aside though, I'm done begging for likes. Still appreciate you guys tuning in and supporting this YouTube channel. Look at the Nasdaq right now. What do you see right away here? There's kind of one, I think, kind of obvious difference here in the Nasdaq. We definitely have that strong run down. So we definitely do. That strong run. Now, what does that strong run want to do right now? It wants to retest that low, right? All momentum, right? Again, remember, momentum, strong run, retest, bounce, right? Bounce. But what's one difference though? Yeah, there's now three ranges on this chart. There's a range right there, there's a range right there, and a range right there. Now, we already know that the ranges above us, right? These ranges, they're going to want to hold that breakout pullback. They're going to want to hold that breakout pullback. So we know that part is the same as the S&P. But hold on though, what does that range want to do? Yeah, this is where things might get a bit interesting, because now the amount above the range, the amount below the range, that puts me, where was that again? Yeah, that 626 level. That should sound pretty familiar. Yeah, it's right there, that big low, that unfinished business right below us. So I'll tell you, one small difference on than the S&P would be, we go up, we sell that bull trap, right? One try, two try, again, get above that high, right? Because of the overall range we have on the hourly time frame. Now, we may only go back and take out that low and bears once, bears twice, back up again. Very much still valid. But would anybody be surprised if it made a big move down? Felt really scary. This is that scenario where this will feel it'll feel very bearish, because it will be pretty bearish. But you tell me, is that a good place to sell? No, it's not. Now we're at big time support on the hourly time frame. We're completing our pendulum swing. Yeah, this is a great spot. You want to find a short squeeze? This is where they happen, right? Below ranges. We finished off the pendulum swing rotation. We're at key support, big old range above us on the hourly chart, range above us here on the tick chart. And again, on these moves here, it's that bears once. I'm not going to blindly buy it. You can't blindly buy these. Well, do whatever you want, guys, but you probably have learned this lesson already, right? We can't just step in front of that freight train. But once those bears get caught, once those bears commit, right? That's the key. Once they commit, then I know where their stops are. Or as my first mentor would always say, then I know where their pain is, right? And I can buy right into those stops. And remember, when markets get squeezing, we want to be adding, right? When markets get squeezing, we want to be adding, right? And we know when it starts to squeeze, because what happens is they start to separate away from the moving average, right? The pullback separates off that moving average. Like we saw separation over there, right? So separation, higher high in price, and we're adding more on the add-on, right? Right below that low. Bear trap, add-on, and then where's the market trying to go? It's trying to go back up and take out that high. And because we got that big range on the hourly time frame, that is what we always leave a runner in these situations. And again, much like on the S&P, if we don't get this thing running lower here right now, what if we began to go higher here? What would be a couple of scenarios that you might want to be ready for tomorrow? Well, one scenario would be a breakout pullback off that range now. I mean, come on, this would be a beautiful trade for us tomorrow in our trade room. If we're able to run higher here overnight or in the pre-market, then we look for that breakout pullback, which is, again, is almost always going to be a two-legged pullback. Think about a measured move that goes a bit too far. And ideally here, we're going to use the top of that range combined with that 21 EMA. Now, why the 21 EMA? Because I want to trap them in, right? Let those bears try once. Let them try twice. Squeeze those stops and run going higher, right? If we pull back, the bears once, the bears twice, and squeeze those stops running higher. Love the idea of a run up. And again, I will look for that bull trap up there. I will look for those buyers once, those buyers twice, get above that high. That takes us lower. We then pick it up on the breakout pullback zone. We don't force the entry. We wait for price to pull back to that 21 EMA once, twice. We squeeze those stops, and we know now the market wants to go where? It wants to go back and take out that recent high. And while we're making our way back to that high, if we can, we don't always have the open space for it, but if we can, separate higher high, and we're adding more on below that low. This will be the majority of the profit off in that position, but again, with the big range above us in the hourly time frame, you do want to let that trade run. Love, love, love that breakout pullback scenario if we keep squeezing, going higher here. And the other thing I want to remind you is we've got big news coming later on in the week this week. Nobody should be surprised here if we start seeing new ranges form next 24 hours, right? This market could easily curl up in the fetal position before NVIDIA comes out on Wednesday afternoon. Now remember, whenever we have multiple range, this is very, very important, multiple ranges, recency, very important. The most recent range is always the most important range. The previous range is then used for a breakout pullback. So if at any point tomorrow we go sideways in a range up here, what does a bullish range want to do? It wants to rotate off of that low, right? What does the previous range want to do? It wants to break out pullback. So remember, stacking ranges is a good thing, right? I mean, the best scenario would be we go a bit higher here. We pop overnight, go into a range up there, and then wait for a breakout going lower. We don't want to sell that breakout because now that range now is a magnet and wants to rotate higher. But we wait for rookies. We wait for the retail traders to come in, look to sell short on this. There'll be some divergent signal there, some indicator that's worthless, but nobody uses anymore, and we'll buy right into that bear trap. Now remember, on these ones, the new range wants to rotate, right? So now we know where the bulk of the profit comes off. I always take some targets off at the other side of that range. And as always, we'll hold that runner for that pendulum swing on the opposite side. Bear trap off that low, adding more below the swings. Bear trap, add on, take some off, top of that range, and leave that runner for that big rotation going higher. Now we wait. Do we get that run lower for the beautiful squeeze off of that low? Do we pop up for a breakout pullback? Or do we go sideways into a range? No matter what we get for tomorrow now, you are ready now with a game plan. Now, speaking of tomorrow, it'll be here before you know it. And the place to be, the trade room. 8 o'clock Eastern time. We trade this stuff together. Guys, the easiest way to start making repeatable profits is to learn and trade along with me every morning at the opening bell. As always, I'll put all the important links you need to get started down below in the description. Start first on that free video course. You're going to love all those trade examples I share on the website. Then come join the trade room and we'll do it together every morning at the opening bell. In the meantime, guys, hope you learned a bunch here tonight. Hope you use this knowledge to earn a bunch as well. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.